to Prime Property, your weekly real estate reckoner. I'm Nantara Rai. It's been a long weekend filled with holidays, and we decided to do something special too. This week's episode of Prime Property is dedicated to answering viewer queries that have been flooding our email boxes. Today's expert, or what we call our property doctor, is the founder of Artha Yantra, a personal finance advisory firm with over 70,000 clients. We got on board the founder, NITIN VYAKARANAM. Here are NITIN's qualifications. He holds multiple patents in retail financial services and customer value measurements. He's an alumni of ISB and an electrical engineer from Northern Illinois University. Welcome, NITIN. Now let's get down to business. Here's our first email query from a viewer. It's from Dr. Deepshika Saini. She writes in, I'm 29 years old. My husband is 32 years old. We want to buy a property in Asha 2022 in Panchkula. Is it good to invest there? No plan to stay there right now, but ultimately we want to settle near Chandigarh. Please suggest regarding the project quality. SL Group is publicizing the project, but they're asking for 6,100 rupees in the name of application fee, and that's non-refundable. The thing which is attracting me is very cheap rates. I have to pay 5 lakh rupees in hand. So should I go for 2 BHK or 3 BHK? Kindly suggest. My husband and my combined salary is 1 lakh rupee a month. NITIN, I know you're not going to get into specific projects, but just going by the income and the payment plan, what would your advice be?
So before you actually plan to buy this home, you have to take a couple of important calls. Number one, you have to understand that given your combined income, which is 1 lakh rupees, how much EMI should you be able to bear? So 40,000 rupees should be the ideal amount of EMI that you should be able to pay, given your combined income of husband and wife. Number two is to ask, the question is whether you are ready for a home where you are investing in. Do you have a home where you live right now? You are looking at an investment beyond that. Those are the information pieces which are missing in this question, but I think you have to look at that before you make a call. Third, when it comes to a particular project, I think you have to look at each project based on the builder and the reputation, look at the agreements, go to a lawyer, get those agreements validated by a lawyer before making any decision. I think the new bill, housing regulatory bill, is going to really help any new purchases depending on which state you are in. If your state implements this bill soon, you should be able to benefit from that also, getting protection from any future potential malpractice that a builder can commit.
Okay, NITIN, I have a follow-up question to what you said. You raised a point that should anyone pay an EMI of 40,000 rupees when the income is 1 lakh rupees. So do you have any preferred ratio when it comes to EMIs as well as income? What is that preferred ratio?
Yes, so typically if your take-home salary is X, we expect you as a consumer to not take a burden of more than 40% of that. So if it's 1 lakh rupees, not more than 40,000 rupees should be a EMI. Once you go beyond that, your leverage is too high. So we prefer and expect our customers to really look at that as a threshold.
Okay, so 40% you're saying should be the outer limit when it comes to the ratio of the EMI to the income for total leveraging. My next question is, and you talked about you must do your due diligence. It sounds very easy, sounds very simple on paper, but it's really not on ground. For example, I understand banks have stopped disbursing sanctioned home loans in cases where they feel the project is not going to be executed, or in cases where the builders have started defaulting to banks. That's one part of the problem. You're not seeing any sign of revival in the property market. There are so many different dynamics at play. So irrespective of what the pundits are saying about a revival, and people like you talking about due diligence, is it at all possible? Should people, given the status of the property market, be even looking at it as an asset class to invest in?
I think buying of a property, I think that you should look at it in two ways. One is, yes, in the way the market is, where we stand today, the hurdles that a consumer has when it comes to buy a property is one. The second is, if you look at, at least at Artha Yantra, from a personal finance perspective, we feel a lot of properties in India are very expensive. From a personal finance perspective, we really are not advising a lot of customers to go for buying a property. We feel renting a property is much more financially efficient. So I think I agree with you that we have on one end a structural problem, which hopefully will get addressed with this bill and when it gets implemented across states. But we also have a market problem where the pricing itself has really not come down enough for normal middle class, upper middle class people to go out and buy. Renting is far more financially superior option right now.
Okay, so that's your advice to all the people looking to invest in property as an asset class. Next up, our query is coming in from Avinash. He emails, please furnish me full details for 2 to 3 BHK flats in Ranchi, price range till 40 lakhs at a good location in Ranchi where it is ready for possession. NITIN, what's your advice?
Yeah, so I think Ranchi is one of the growing tier 2 centers in India, and we feel that there are 3 areas which actually are great places for people to buy property. One is Morabadi, other one is Lalpur, and third one is Baraito Road. The average price in these areas is between 3,000 and 3,500 rupees per SFT. That would ensure that a typical consumer could buy a 1,000 to 1,200 SFT property with a budget of around close to 40 lakhs.
Taking up from what you said, NITIN, here's my follow-up. The last time round, when there was a boom, we also saw a boom in the property markets in the tier 2, tier 3 cities, and that crashed very, very badly. We saw the markets in the smaller cities go bust. This time round, do you think the recovery is sustainable? Have builders learned their lessons? Are you seeing realistic pricing?
Sure, I don't think so. See, if you really look at it from an income perspective, and income levels in tier 2 cities continue to be at levels they were 3 years ago. Those have not risen at the same rate at which the real estate prices have risen. That's true for even the tier 1 cities. But I think the difference is fairly stark in tier 2 cities like Ranchi. And in this case, for example, if he's looking at a 40 lakh property, he's looking at and assuming 80% is given by loan, he is looking at a 25 to 30,000 kind of a EMI. Again, is the market does the market have salary levels which can sustain those kind of EMIs? I think that's an open question, and that has not been addressed.
So you're saying the buyers and builders in the tier 2, tier 3 cities have not learned their lessons. Because let's get realistic, 40 lakh rupees for Ranchi does sound very steep.
In fact, it's kind of funny, that's the same price in which you will get an apartment in Hyderabad.
That's a word of caution coming in for the tier 2, tier 3 cities. Property prices in the smaller towns continues to be overpriced. With that, time for a short commercial break. Come back in less than 2 minutes. In this special edition, we are answering viewer queries. And do remember, you can always send us your queries. Our email address is primeproperty@network18online.com. You can also tweet me. We're back in less than 2 minutes.